There is a rather unique relationship between the dollar and the oil, which manifests itself only amid sharp swings. When the greenback posts steep gains, oil loses value, and vice versa. That's exactly what happened yesterday. However, the situation in the energy market has not changed. The risks of energy shortages remain. That such a sharp fall was supposed to be followed by an immediate correction in oil prices. However, yesterday, Norway's government halted an oil and gas workers' strike. This means that oil production and supply volumes will return to normal level. And this news calmed the market and did not allow it to enter an upward correction. However, this is only a temporary phenomenon, and oil is expected to resume its bullish run very soon. Now let's take a look at the trading chart. Yesterday, Brent crude oil futures lost about 11%. As a result, the quote came close to the psychological level of $100 per barrel and then saw a technical pullback caused by local oversold conditions. If the price fixes below the control level of $100 on at least the 4-hour chart, the volume of short positions will increase. Until then, there is a likelihood that the asset's weakness will turn into a full-fledged correction. In fact, almost all instruments in the global financial market are somehow related to the US dollar. There is some sort of an inverse correlation between the greenback and other trading assets, and gold is no exception. Yesterday, the yellow metal fell below $1,800 per troy ounce and even approached $1,760. It's clear that a rebound is inevitable following such a sharp drop. Thus, gold will most likely try to bounce off oversold territory and return at least to the level of $1,800 per troy ounce in the near future. From a technical point of view, if the price breaks through the support level of $1,760, the metal is expected to extend losses and hit for $1,720. Speaking of the ruble, the situation is somewhat different. Obviously, a steep rise in the value of the US dollar across the board also affected the Russian currency. However, the decree number 430 signed by Russian President Vladimir Putin had a much greater impact. The new rule established a ban on the withdrawal of funds received as a dividends or through a disruption of a Russian company's profits outside the Russian Federation. Given the fact that the described cases are of the most common ways to withdraw capital from the country, this immediately provoked a massive flight of speculative capital. The fact that they precisely features their prospects and the stability of the ruble-based MOEX Russian index. In general, the weakening of the ruble is beneficial to the economy and businesses. Against this background, it can be assumed that the market will see sign of stabilization slightly above the mark of 60 rubles per dollar in the near future. And since early July, the greenback has gained more than 18% against the ruble. And this is a strong price change, but it fits into the recovery process. In the medium term, the dollar is still oversold, which means that there is still room for upside in the market. If the uptrend continues, the dollar-ruble pair will hit the local high seen during its previous correction on May 27. Notably, technical analysis at this point is of a secondary importance, and it's not worth focusing on it. That's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.